Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 2nd of July. Had to think about that for a minute. Now, let's have a look at the markets now. It's no surprise the equity markets have really gone into almost dead zone, leading into the non-farm payrolls. It is a massive number. The Fed have been talking about employment. Inflation's been on the rise. We're just needing, a really good employment result to get the dollar really moving to the top side. If we get a weak employment number, then we're back into the range and, we're losing the whole momentum of this dollar move. So fingers crossed we get some strong numbers. Now, what do we see yesterday? Well, jobless claims a little bit softer than the previous number. Construction spending a little bit lower, manufacturing a little bit lower. And that led to a little bit of a blip onto the downside, right? So I'll show you the charts in a second. I was saying this yesterday. These numbers are second to third tier numbers at best. Don't get sort of fooled by the three pie things there on the initial jobless claims, bars, I should say. It was a zero number until a few years back. Now it's sort of got a bit of highlight because it's the only employment number that comes up every week. So it doesn't really have the same weight, anywhere near the weight that the non-farm payrolls does. But anyway, it's enough to sort of get things moving. And as I was saying yesterday, these numbers, second or third tier numbers, if we get some weakness, potentially a chance to get into the dollar trade ahead of the non-farm payrolls at better levels. Now, just looking at the moves here, right? This is the little dips down. You get a little spike higher here on euro, probably enough to flush out a few little stop losses above 118.65. If anything, dollar Swiss has come back and almost hit that line perfectly. That's starting. The Swiss is starting to look a lot better. You know what? And actually, weak US numbers could be a good trade to the downside through that trend line. Dollar yen still cruising to the top side, as is dollar CAD, despite oil getting above $76. That's a little bit of an odd one. So it's really moving with the dollar at the moment, dollar CAD. And you can see there that little blip on the radar, some of the Aussie. I mean, we're basically seeing really good uniform price action across all charts, all major charts. So the dollar is impacting all of them the same way, right? Now, leading into the non-farm payrolls, we are moving sort of top side with the dollar, right? And the dollar block, euro, sterling, Aussie, Kiwi, all moving to the downside. So we've got a clear map here of what's going on. We need to overlay the non-farm payrolls data on this. Strong US numbers, the dollar rallies, well, it should rally. Weak US numbers, the dollar falls, right? So you just got to isolate the best pairs, get the best entry levels up, and then look for the opportunity. Now, coming into the non-farm payrolls, I'll say this every time, it's not an easy number to be sort of trading sort of live. Definitely not with pending orders these days, right? So you're looking at the outcomes here. There's a number of different numbers all coming out at once. So the likelihood of those all coming out strong or weak, it's there. It's a chance, but it's a little bit hard to work out. Now, the main numbers you want to be focusing on, non-farm payrolls themselves, the unemployment rate. And I mean, the Fed brought this in after the Bank of England about a year or so ago. They were looking closely at the average earnings because all the numbers became very stagnant. Now, the forecast poll for non-farms is 700 and 5.7% for the unemployment. Now, these are the two main numbers that we've historically just focused on. The first one would be the non-farms themselves. The market reacts to that first number, and then they come in and look at the second number. What was the unemployment rate? Now, if we get these two numbers matching up strong, that's where we're going to get that strong dollar move. If they're both weak, well, then we're going to get weakness. If one's up, one's down, one's better, one's worse, could sort of neutralize everything. Now, because there are a number of numbers coming out here all at the same time, what happens to liquidity is it disappears. Like 10 seconds before the number, you'll see the numbers starting to widen out a touch. But what the banks do is they don't sort of pull out all the liquidity, but it's only like small numbers that are available. I would expect with this number, with the anticipation, you may see some wild price action right at the release. And this is where, when you look at your MT4 charts, trying to process that, you often get a 30, 40 point spike to the top side, 30, 40 point spike to the downside. That's that instantaneous withdrawal of liquidity. 10 seconds after the numbers, it's all back and the numbers start moving around. So as I said, focus on the two core ones, the non-farms themselves and 5.7%, the unemployment rate. They're the numbers I think that you need to be keeping an eye on. Above 700 and below 5.7, we're looking at a good dollar move to the top side. Now, under 700 and above 5.7, so 5.8 or whatever, it's going to be not such a cool outcome, right? We'll see the dollar drift lower. And as I said, if it's close to the mark or one's up, one's down, we could get a neutral, you can get a bit of price fluctuation, but not the clean move we're looking for, right? This number is big, it's hairy, it's aggressive. Just looking at, I'm just widening out the dollar index there on the downside here. So keep an eye on this. We've got some levels to work with, right? Really more so if the number comes out weak, we got levels to sell down through. Dollar Swiss and let me just take you back to the charts, because there's getting into the trade is going to be hard for some things if the numbers are strong, because it's already sort of breaking higher. But if it breaks down, then dollar Swiss looks probably one of the better opportunities. I'm just going to leave dollar yen out of it for this point. And dollar CAD's left the building already. So, you know, it's probably not going to be offering much. I think euro, I'd feel very comfortable selling euro on a strong US numbers. Sterling, well, it's a fair way from resistance, as is the Aussie, but I can see a new sort of trend line forming off this line here. Same with Kiwi. But you've just got to try and pick the pairs that make sense. This is where we need clarity around the number being strong or weak, because if it's not, you get the discombobulation and price fluctuations. Now, what I'm thinking is this is a much bigger opportunity than a lot of people think, right? So let me just get my longer term charts up. Now, what I'm sort of talking about is if we do get a strong non-farm payrolls, I think there's a big chance that we might see, you know, over the coming days, week, or couple of weeks, a good 300 or 400 point move on the dollar, right? So you're looking at this is the daily charts. You can see here where the dollar index is broken up. Dollar Swiss still hasn't broken to the top side, so a chance there. Euro, this is what I'm talking about here. On the daily charts, it's sitting right at this level around 118 and a half, 30, 40, around there. Good chance for a move to the downside. So strong numbers. Euro has got to be a chance. Sterling's already broken down, as has the Aussie and Kiwi on the longer term. And check out dollar CAD, strong US numbers, dollar CAD to the top side, despite oil rallying. I think it's a really good chance. We could see a couple hundred points there. As I said, over the coming days, week, if we get strong numbers, this is going to be a strong dollar move into next week's CPI numbers. And that's going to be pretty exciting for most of us. Now, dollar yen just cruising to the top side. You know, it's sort of like the dollar is moving quite nicely against dollar yen. I just haven't picked it. So it's I've sort of been shying away from it, but I'll keep an eye on it from here. So out of these pairs, focus on the pairs that have good levels, right? You can see a lot of these, like the Aussie. Let me just change color of the pen here. Like sterling, Aussie, there's like a bit of a pivot line here where it's at. No one wants to push these things lower at the moment, but they will go if the non-farms are strong, right? So we may not have clear levels on sterling, Aussie, and Kiwi, but I think the sort of pivot line here from the previous lows, etc., may give us the opportunity. Whereas when you look at euro, it looks pretty clear. We've got a trend line there as well. Anyway, it's going to be pretty exciting. The only thing I can say is make sure you control your risk management, right? If you're using pending orders, you're probably going to get run over ahead of the numbers, okay? Especially if you're using OCO pending orders. If you're looking to use pending orders above or below the market, I just go with the side that has the best opportunity and make sure your entry is at least 20 odd points away, because if you're 10 or 15 points away, you're going to get pulled into the trade before the release. right? And then with the widening of the spreads, your stop loss will be covered. You'll be sort of kicked in and kicked out before the number even comes out. So just be aware of that, right? Trading live is good. Trading 5 seconds or 10 seconds after the number is even better. You may give up 30 or 40 points, but you will be able to look for a retracement if there is one, if the numbers aren't too variant or it's starting to run, you can potentially just get in with the momentum, right? And that's why you need small trade size, because it's going to be pretty erratic. All right, not for the faint-hearted. Canadian holiday, I think, was it today, yesterday? And we've got US holiday next week. It's going to be a short week, but it's going to be a huge focus with CPI. All we need is the US employment numbers to party, come to the party, start dancing for us, and we start to get these clean moves, and we'll have plenty of opportunities after this. All right, guys, all the best. Huge opportunity. Let's hope the penny drops and we get good numbers. Cheerio.